Hey there, it's Will. I just wanted to talk today about reverse engineering stocks that have gone up a lot, like high growth movers, high big gainers, going back to where you might want to have gotten into. So we call that reverse engineering using the charts. If you want to get a free trial of this TC2000, check out the link in the description below in the video. And you can get $25 off as well if you sign up. And I've got the gold membership and real-time US stock data. So if you've been watching my videos, you probably get a sense of what I look for, but I'll be going over that again just because it's basically the same concept. But when you look at a stock like FUTU, for example, what I use is the 8 exponential moving average, and in terms of being in an uptrend, and the candlesticks are above, they close above the 8 EMA. So that's the way I do it. And so what you can do is go back to sort of the earlier stage. And there's a variety of signals, I guess you could say, that I use. And so sorry if this looks confusing, but basically the candles above the 8 EMA. So when you're in this stage here, you've broken down below and then you're sort of poking up a little bit. And then you have this breakout here. So what I'll do is when it comes back up, you have this line, like a descending line, and you want it to break through that. That's kind of an early entry here. So you see right here where it broke through that descending trend line. Another spot for entry is a breakout above a recent high point. In this case, it's probably the high. Yeah, so it broke an all-time high pretty much. And you see how it's a big candle. So that was the excitement. People are seeing that that's happening. The other thing that you can notice is the red dots and the green dots. Those are volatility stops. So they kind of tell you, they kind of take into account the range, the trading range of the stock. So when it's red, you generally don't want to be buying it. You want to potentially be shorting it. I wouldn't short this when it's close to a 50 moving average or even a 21 EMA, because it often gets support at that point. The green indicates a good entry point a lot of times as well. And it also gives you a point to put your stop loss. So it kind of stays below the price. You can also use the 8 EMA as well, as if it closes below as a selling point. The other thing you'll notice is it's supported pretty close to the 50 moving average. So some people use the moving averages like 50 or 21 to, they just buy if it's at that point. But I'm looking for, a different scenario where it's breaking out through that and going in an uptrend. So that's how you kind of reverse. The other thing you can look at is MACD, or what I have here is price percent oscillator. And you get this crossover here. So you can see, like, as it was coming kind of like this, you have this MACD below the moving average. And then once it crosses and you get these green derivative oscillators, the histogram, it's a confirmation. You also have this rising stochastic. So these are kind of like confirming indicators. I'm just going to hopefully get the idea. I'm just going to show Tesla, and you have a breakout here, an uptrend above the 8 EMA. This even closed above the 8 EMA here, so it kind of opened up down here, but it ended up closing above. And it's been up since November 16th or 17th here. So you could be holding it. That's why I've got this box here. But if you're using the green volatility stops, or like this would be a close below the T line. This is definitely a close below the T line. Red volatility stop. But if you had these, if you put your stop right at this green volatility stop, it would be static for a week or two here, and then it would have got triggered here. So if you start to see it come back up, you'd be tempted to buy right here. You know, if people see, oh, it's supported at the 21 EMA, so I'll buy back or something like that. But I don't do that. I wait for it to go back up and get to a green volatility stops, and for ideally the momentum starts coming back up again. So you can see how it keeps declining here. Even though you had a flat period, you see this declining. It's not a perfect indicator, but I wouldn't be buying. The other thing is you have this resistance at this point here, like from this support or these previous couple of highs. So you might want to wait till it breaks through that point because it hasn't gotten up there yet. So it kind of came up and it starts coming back down. So I would have sold out because of the volatility stop, and then I wouldn't be buying. And the other thing, even though you had a sort of a support at the 21, here you kept declining, and now you broke as of this morning. You're below the 50 now. It's pre-market right now, but you're about to break through the 50 moving average. So you have to see if it's going to, you know, basically hang around that 50-day moving average. But you can see how we have this declining momentum here, MACD. The nice thing with TC2000 is the pre-market data. So I'm seeing, you can see right here, it says 8:27, 8:28 a.m. So that's pre-market, and I'm actually seeing, you know, the price and you know, you can zoom in on 10-minute. So this gray area is pre-market. So a lot of stocks trade in the pre-market, and you can actually buy or sell if you wanted to. There's usually not as much volume, and it's not a great indicator as to what's going to happen during the day, but you know, it's an available option for you to see the pre-market data. Just one other thing, I'm into this COPX. So inside of the copper miners is FCX, obviously, which is Freeport McMoran. You can see how they're all doing really well. There's multiple Southern Copper. This one, TRQ, Turquoise Hill, is doing really well today, 7%. So you have the option of buying the individual stocks, but as I mentioned, what I do, you go back here and you look where would you have bought in. And right here, to me, obviously this is the lowest point, but you can't necessarily get that. You know, you don't know where that's going to be. So I'm waiting for it to establish an uptrend. You see the MACD is crossing up right here, but there's some green. It is above the 50 and the 8 EMA, but right there you got the green volatility stop, and you're up, you know, 56% in like a week, or 42% in a couple of weeks on that Turquoise Hill. But the COPX is an ETF. So an early entry is here with the MACD cross, but you have that risk, and you can see how it's got stuck at that recent high, but then it broke through. So some people wait for a breakout, and you're up here, and you know, you're still doing well. Sometimes it breaks out, comes back. There's no guarantees, but that is doing well. Jets is another one that's, even though the markets are a little bit tentative right now, potentially looking at a pullback here, Jets as well. And so the same sort of thing, you look at the stock, you think, oh, you know, you could buy here, but if you look back, you want to see where you'd ideally get in. So you have a breakout above the 8 EMA, above the 50 moving average, 50-day simple moving average. And I drew a line here as it was coming down. And once you broke out through there, that was a good indicator of an entry point. So I just wanted to show kind of the reverse engineering. If you see a stock, you know, you don't necessarily want to chase things. If you do buy later in the game, you know, you want to use a stop loss at some point, minimize, you know, keep your losses to a reasonable amount. But try to train yourself to get in earlier in the breakout. And that's hopefully helpful to you guys. So if you want to get TC2000 software, check out the link in the description below. And we'll talk to you in the next video.